All right, folks, welcome back. This is our midweek review for the ICT Mentorship for January 12th, 2022. All right, so we are looking at the dollar index. I mentioned on yesterday's review that we would be likely to see this thing trade lower, aiming for the imbalance here. And I said if we went through it, watch and see if it wants to act as resistance to set a stage for a run into this imbalance. It doesn't have to come back to that. It could stay heavy and just go right into this imbalance here, but I'd prefer to see it trade back up into that a little bit. All right, hourly chart, the dollar index. I believe it was the first few minutes of the discussion on dollar when we transitioned to the hourly chart on last night's video. I mentioned that watch this order block in here, in this imbalance. If either one of those, we had a fair value gap and this fair value gap here. If either one of those were traded to during the kill zones like London or New York, that would be a catalyst for a potential setup. Now, I didn't go that much detail. I just said basically watch this one and then watch the order block with the fair value gap in here. Well, we traded a little bit softer first and then ran right back up into the discount low, the old fair value gap in here, and bearish order block. We hit it here and sold off like gangbusters. Using market structure, swing projection, high to low, 1.5 standard deviation. Not bad for targeting purposes there. So, real quick, not to beat my drum here because I'm not trying to act like I'm all that in a bag of chips. I'm just reminding you that when it's likely to move, I'll let you know. Okay? We've been in a consolidation for a while, and yesterday I kind of like said, we're most likely going to make a move down into that range because Powell had spoken, and when Powell speaks, the central banks will use his banter one way or the other. And what they saw here was an indication that the balanced price range was going to stave off any kind of advancement. So therefore, the fair value gap down here, which is the daily chart, that discount array would be the draw on liquidity. And if it's going to be heavy, you would probably trade through that. That was the reason why I gave you the commentary I gave you last night. So if we trade through it, look for it to possibly act as resistance, much in the same way it did this. Okay, so we traded through this old imbalance and came back up and hit it. Think of that same thing happening here, just with a little bit longer term swing versus this small little swing here. Okay, and the dollar index 15-minute time frame, you can see real nice return right back to that discount low, which acts as a premium array now because we're below it here, trades up into it, and it acts as a point of inversion. Okay, so think of it as your classic support and resistance theory, has retail logic, but this is the real, like I said, these imbalances, they are the real support and resistance levels. They're going to provide you the x-ray view of what price should be doing with the scope of and thought process of classic support and resistance. You can see how beautiful that is there. And sell off. Small little institutional order flow there. And again in here. And just really melts down into that 95 big figure and just below it for that Fibonacci level. All right, euro dollar daily chart. Just a mirror image of what I was expecting in the dollar. I mentioned how we were going to likely trade up into this imbalance here. And then the bearish order block, I just added this level. I didn't have this here last night, so that way we're being fair. But up to the body, it trades up into that there. Completely closes in all the sell side imbalance, buy side inefficiency. Beautifully delivered there. And notice how we opened on this candle, traded down into the order block and rally. Okay, this is actually the framework I'm going to be using for the lecture on trade framework. The idea that I was leaning on last night was basically what I'm going to show you in the teaching, but here's the thing. I explained it to you. I explained that we were going to likely trade up into this area in here and rebalance, and I said that last night. And it was based on the intervention that was propelled by Powell speaking the day before. Okay, so yesterday, basically, it's his testimony at 10 o'clock in the morning provided the basis for this move here, and then obviously the pressure on dollar going lower would allow and alleviate the consolidation in here. And the buy side that I said was building up in here, it just reached up into that, rebounds then into the order block. The things that you would be looking for, because I told you this was likely to happen last night, so that was before the fact. What would you expect, or what could you use as a framework? That's what I'll show you tonight. Okay, but it's basically based on this opening, trading down in the order block, and some other factors. All right, hourly chart, euro dollar, old imbalance. Okay, see that? And we also have a low, high, lower low. So that makes this a what? Bullish breaker. It becomes active here. And then we trade down into that old imbalance. Here, look at the buys of the candles. We have a little bit of errant price action, but nonetheless, it's still respecting it. And we're trading inside of the bullish breaker. Okay, so there's your catalyst there. Completely rebalances the discount low, premium high of that daily imbalance I mentioned last night would be likely drawn into. And then the bearish order block, the body or the opening of that daily candle seen here. Really, really nice delivery there on euro. 15-minute time frame on euro dollar. All right, so we have the old imbalance. That's this level here, discount low, premium high. This is the order block level on that daily chart. So I'm extending out that opening price on the down close candle on the daily. So it's trading off of that as well. And then we have this short-term high broken right there. Oh, Michael, that's like splitting hairs. That's all you're looking for. The logic is you want to see a short-term high broken to the upside. It does it here. And what does it leave here? Bullish order block, down close candle with a fair value gap. Trades down into that there at the 830 CPI number. And then we have the liftoff. Okay, so everything coming together there. And then up into the imbalance. All right, pound dollar daily chart. I mentioned that we would likely trade up into this area here, take out the buy side liquidity. I don't have a target beyond that. Okay, so it could come up into this body here, and after that, I don't know. So I would need to see what price is done if and when it does that. But for the most part, we basically did what I wanted to see for this week, and I could comfortably move to the sidelines. Tomorrow's Thursday, so you know, one day out of the entire week delivered as I was expecting. But it's still January. Like I said, it's try not to get too overzealous. All right, here's the hourly chart. Just consolidation until we get to the 830 news embargo lifting and the CPI number coming out for the dollar. And then one-sidedness repricing into that imbalance on the daily chart. In the 15-minute time frame here. Drop down, consolidated till we get to 830 here. And we rally up off of that news. Small little fair value gap there. Trades into that. That's a nice little buy. So we have optimal trade entry there. And fair value gap. That'd be a nice little run into a premium array seen on the daily chart. All right, and tonight's lecture basically is what could have been used for today with the framework it gave you for euro going up into its imbalance. And the visualization of the trade framework is such. We have a fair value gap. Now, we're going to assume that the fair value gap is over here anchored. So the necessity of all the other candles is not important. Or it could simply be used as an old high. So interchangeably, this can be one of two different frameworks. You can either use this with the fair value gap, which is kind of like what I'm teaching. So you can look at the euro dollar with this idea that transpired today. Or take the fair value gap idea out of it and just simply use the old high. And it would be basically the same thing. Okay, it's a premium array. The market's likely to draw up into that. We're looking at a consolidation, and the market obviously has been in consolidation in euro, but at some point, as I mentioned with Powell speaking yesterday, that was the reason why I felt that dollar would be heavy. It would trade down to its discount fair value gap, and euro would trade up into its premium fair value gap. So if we have that logic here, we're expecting the market to draw up into here, and we have a down close candle, and the next day we have an open, and we open above that down close candle, potentially bullish order block. If we trade down into that order block there during a kill zone, preferably New York, I got a few emails asking for, can you talk about swing trading? Can you talk about how that works? Because I don't like all your intraday stuff, and they don't mean it to be disrespectful, but they have a swing traders model. Well, we're not in swing trading territory, folks. I mean, I hate to say it and sound like a broken record, but I'm giving you what's likely to happen based on what the markets are doing. For me to talk about swing trading when the market's simply not going to be swinging, it's kind of pointless. I'm giving you things that you can use right now that's tangible, that is most salient because of the current market environments. So, again, any one of these things that I'm teaching you with this framework, they're like Legos. Okay, you ever seen the little plastic blocks that children play with, and you snap them together, and you can put one on top of the other, snap them together, and you can build larger things. Each one of these components, this framework, can be utilized as a smaller segment or entry pattern to a larger swing. Each one of them can, individually, or they can be viewed as an individual isolated trade setup. So I'm teaching swing trading entry techniques by doing this. I'm teaching position trading entry techniques by doing this. I'm teaching you day trading entry techniques by doing this. I'm teaching you scalping entry techniques by teaching this. Okay? This logic over here is 100% scalable, just like this is. Okay? But you have to understand what you're looking for, why it should be even potentially possible for a position trade, a swing trade, a short-term trade, a day trade, a scalp. So you have to have that logic, and that's what I'm leaning on. I'm providing that experience, telling you the market's consolidating, don't do anything. The market's likely to leave the consolidation last night when we did our commentary, and it did. Okay, so let's hope, for those of you that want a little bit longer term perspectives and things like that, let's hopefully move outside these consolidations and start seeing some swings. But it's not swinging. Okay, so, I know the frustration, but also I don't like when I'm reading emails and there's this undertone of this sense of urgency. I'm about to quit. I'm getting frustrated. Well, the reason why I tell you don't engage right now, so that way you spare yourself that frustration, because the markets are very fickle right now. It's very difficult. It takes a lot of experience to be able to navigate that, which is the benefit of being here. But if you take a step back and look at what's been going on for the last year or two, I'm helping you navigate. But you can't expect to be doing what you want to do and trade like how you want to do, or trade how you envision yourself trading, when you can't do it because the markets are not likely to develop like you want them to. Okay? So put it this way. A mega trade. Everybody wants to capture a big old move like that. But there's not a mega trade forming right now. You get the logic there? So just because you want to do something and you feel a sense of urgency doesn't make it possible for you to do it. So when you look at these components like this, individually and isolated, just know that they also can be plugged into larger price swings. And then when you incorporate the swing trader's logic that I teach in the core content, it's complete. This is plug and play. I'm giving you trade framework. Every single one of these is a potential entry technique to anything that you want to do, scalping up to position trading. But you have to have a market environment that is conducive for those things to occur if you're looking for position to swing trading. We aren't there yet. Okay. So anyway, back to this. The framework is this: we open higher than the down closed candle with the expectation that we're going to draw up into the fair value gap or old high. So either one could be the framework here. But we've consolidated basically, and we have an opening when we've been expecting higher prices. We open higher than the previous candle. So we expect it to trade down into the order block here, accumulate longs, and then reprice into the fair value gap, or if it's not a fair value gap there, just above the old high. Okay. So we have a 15-minute time frame. It's consolidating. Okay. It's waiting for news like we had today. I mentioned last night that today we would see a CPI number. So we've consolidated, waited for that CPI number. Prior to the CPI number, we had a short-term little break in market structure, and then we trade back down into a breaker, as I mentioned in the Euro-dollar commentary. That would be seen like this. Okay, so we have a bullish breaker, low, high, lower low, find the high in the middle, extend that out in time. If we trade into that during New York Open, so we have New York Open kill zone, we have CPI number coming out, and we have the expectation of that daily fair value gap, which is exactly what I outlined for you last night. Said we would trade up into that today. Bullish breaker, New York session, CPI number, the catalyst runs right into it between 10 o'clock and noon. Okay, between 10 o'clock and noon. Let's go back up and look at the 15-minute time frame on Euro. Here is noon. There's the top of the premium high on the fair value gap, and that's the order block opening on the daily chart. It fulfills it right at the time I teach you, 10 o'clock to noon. Okay, so that's that logic there. Now, you may not have traded this. I can tell you I would have traded this, but I did not trade this because we're in January. But if we were in February, March, April, May, even June, I would have taken that trade right there. Okay, with the expectation that we ran higher. Because we had clean lows taken out and an imbalance filled in here, sell side taken, and we accumulated around that daily bullish order block. And we're inside that old hourly fair value gap, premium high, discount low. That's this levels here. So there's a lot of lines in here that's overlapping, and I apologize if it's confusing for you, but those lines are simply this, that old imbalance here. Okay, so it's accumulating there, and this opening price right there, extended out in time, that's the heavy blue line that you see there. Okay, that's what that is. So with that in mind, we're accumulating around that old daily order block inside of an hourly imbalance. Okay, then we have a break in market structure, this swing high taken here, and then fills in the imbalance with the fair value gap and a bullish order block, trades there at 8:30, and then rallies. Now for entry technique, say you wanted to be a day trader and you saw that it traded down here, and this is a 15-minute time frame. So as soon as it traded down there, and you could put a buy stop right at this wicks high plus 1 pip. So if it trades back up there, it fills you on strength, and your stop would be below here. So there you go. That's Larry Williams type entry where he buys strength. That's the only way that that's going to work. I tried to do it other ways when I was coming up in the 90s, and I got smashed. Using buy stops and sell stops as my entry technique when I didn't understand what the market was doing was just dismal. But this is one entry technique that you could use with that idea and not buy on a limit. You would expect, or kind of like a confirmation entry technique, where it's giving you what you would expect to see it fulfill as a retracement order block, but it demands the market to trade there. And you might get some slippage. That's the only problem with those types of orders, especially during high impact news, CPI number. It could give you a little bit higher entry than you really want. So that's one of the trade-offs to buying strength versus buying weakness in an undertone that's already bullish. Okay, so hopefully this has been insightful to you, and I will talk with you on Friday. Notice I said that, Friday. Today I've had a lot of things to take care of in my personal life, accounting. I have year-end tax preparation, fourth quarter tax preparation. I have a lot of things I got to get together for my accountant, and I'm going to need that time tomorrow. So because of that, I will not be doing a video. But as a consolation, I will be giving you 2 of the trade frameworks for Friday's end of week commentary. So I'll have 2 of them for you, because I promised you 5. So no video Thursday, because I have a lot of things I take care of from an administrative standpoint. And if I can, I'm not promising, if I can find a way to put something together for you in terms of a video, I will try. But I don't want to have you expect a video tomorrow and me not deliver it. Okay, so if it pops up tomorrow evening, great. If it doesn't, just know that I already told you, you're not getting a video. Okay, so I just can't imagine me getting everything done tomorrow to do that and be at his office dealing with all this stuff. So it's a lot of information I got to, make sure I have together for him and drop that off. And I just want to make sure I have nothing else to be dealing with when I do that. And I'll touch base with you on Friday, Lord willing.